Welcome to a panel discussion during Oslo Innovation Week about redefining green investments. She Community is happy to take this initiative together with Tool. We are talking about green investment, how to scale companies to other countries from Norway, and how we can get more female investors into this area so that we can close the capital gap.
Let's start with you, Birgit, then. What defines a green investment?
Well, I think first of all, of course, green investments for me as a non-financial person is, of course, putting my money and using my buyer's force to support companies that actually invest in and contribute to increasing green technologies and, of course, stay away from the black markets.
And what improvements can be made for less greenwashing and more genuine green investments going forward?
When it comes to greenwashing, of course, I think now we had the Nasdaq ESG summit here recently, and of course there are a lot of criteria out there. There are a lot of KPIs and ways of measuring. I think a key challenge now that PwC pulled forward was that there are probably too few moving in and looking like behind the scenes into what the different companies are actually doing. So there is a difference still, I think, between what the companies claim that they're doing in their like external KPIs and communication and what they are actually doing behind the scenes.
The prime principles around an investment being green obviously has been changing over the past years and months. And one of the positive things around this is really the way we work around the EU taxonomy. I mean, that really takes us part of the way, not necessarily full way. But I think the tendencies there are really welcoming in terms of being more specific. So, you know, the one thing is, you know, the communication around being green and the greenwashing, as you mentioned, which is predominant in most of the asset management industry. What I think will be positive and what I think investors will be forced in the direction of over the coming months and years is to not only target impact, but to basically put the hand over the cooker and integrate, you know, the impact targets they both communicate into the core of their business model, really. So that businesses to a larger extent live and die with achieved impact and not just targeted impact. And then that would take us at least one step further than we are today. And I think you can lift this very wisely through some of the principles coming out of the taxonomy.
Maybe we go on to Tina, you know, in terms of taxonomy, green bonds, etc. What do you kind of see the future of that to look like? Because there's a current model, but what maybe is the innovative future model for those types of investments?
I think at the moment there are a lot of different rating agencies that are rating different companies, rating projects. And for example, one company can get a high rating from one of the rating agencies and you can get a low score from another. And it creates a lot of frustration. So I think it's important that we do have standards such as the TCFD, the task force, and not at least the EU taxonomy. So when we talk about green investments, when we talk about green bonds, we're using the same standards, so it's transparent, it's comparable what we do, because I think that is what we lack at the moment. There are a lot of investors who want to do the right things. There are a lot of companies popping up because they could see a lack of ways of communicate in the same way. And at the moment, I think we need to focus more on a couple of a single of them, not too many, because otherwise we're not talking about the same thing. So that is important to actually get the investors and the market to focus on the right things and the same things, so it's actually comparable what we do?
I think that, green narrowly defined as something that contributes directly to greenhouse gas reduction is not too tricky a proposition. And there, the EU taxonomy and other standards, particularly if they're independently verified, can play a very useful role. But where it starts to get more tricky and what appears to become almost intractable is if we expand from green to broader categories of sustainability. We go beyond sustainability and environmental things into social and governance standards and ESG. And that's partly because there are many different, right thinking perspectives on what should fit, for example, under the S of social, under the G of governance, or under the E of environmental criteria. And depending on who you are, you might want to put far more weight on reducing ocean acidification, or making sure groundwater doesn't get depleted, compared to someone who wants to focus narrowly on just greenhouse gas reduction. And there is a trade-off between the scope of coverage of what is necessary, right? Because acting to reduce greenhouse gases alone is simply not good enough. We have multiplicity of environmental crisis, social crisis, other problems hitting us, and we need to make sure that investors are acting across all of them. We do not have the luxury of time of doing this sequentially. Let's first address climate change, then we will address water scarcity, and then we will address forest fires, right? And of course, that just means that any single measure will simply not be able to capture the sheer diversity of perspectives. So I think we need to make sure we're intelligent about the measures we use, compare only those things that are comparable. Apples cannot and shouldn't be compared with oranges. And what's important at the end of the day is good sound processes, an independent verification of data, and some semblance of oversight and potential reputational issues where if somebody is found to be greenwashing, they ought to face either a financial penalty or reputational loss. And that's a sensible way forward.
So just to introduce Greg, he's worked in the investment banking industry, and he's an impact investor, so he might have a different perspective in this arena. So do you want to...
I think common take among you guys is there's so many different data points. I think that's number one. Number two is that if you started defining what we want to do, it can be too broad. And I agree with you, Sunny, that it has to be step by step. However, my take is that we need to go back to the basics and look at the purpose of the companies. If you look at the companies, for example, General Motors here in the United States, they say great things. We need to electrify all the vehicles. Now, do they actually walk the talk? Not really, because if you look at the financial balance sheet, where they actually spend money on is big SUVs. The 2021 and 2022 lineup is all these big SUVs that they spend a lot of petrol, gas, or what you call it. So you need to look at the purpose of the companies and do they actually follow up with those purposes? I think that's the key thing that as an investor that we are looking for. And my perspective is that not only we do need to show this purpose-based model, but we need to spread to the general public. That's why I think we want to distinguish ourselves that we are the mutual fund that everyone can be participated. You don't have to be some kind of family offices or VCs or asset managers who can participate. But I think spreading the awareness among the general public, for me, is the key. It's also part of the social inclusion of the capital. That my take on the capitalism is that you need to grease the wheel at the right time, at the right companies, at the right moment.
Also on the topic of redefining green investments, which we also covered on Oslo Scale Up Day with a lot of startups and scale-ups, is that often we think about renewable energy, or when we think about green investments, we think about renewable energy. that we really need climate solution, or we have troubles across a lot of sectors, and hence that's also where we need the solutions. Within agriculture, real estate utilizes 40% of global energy usage, and emits 30% of global emissions, for example, or a lot of other sectors. So hence also, and what we see, which is very fascinating and interesting now, is that technology is really driving a lot of these solutions. So you really don't have to put green or sustainability into it. Real estate sector will look to utilize technology, software, sensors to optimize the building's energy usage. It makes financial sense to reduce energy costs. So really, and also I want to say that because green investments or clean tech investments, we had this wave a couple of years ago, which didn't end too well. But that at that time it was a lot of hardware and capex oriented. Now with this digitalized wave, it opens up for a lot of other opportunities. So software opportunities, which opens up the field for investors to take part. So again, sensors in agriculture that can almost eliminate, and robotics almost eliminate the use of fertilizers and water usage, or foods. I mean, we're replacing real meat with vegan meat. So really, the scope of green investments, and as we say, obviously in reducing emissions, but also resources and circular economy and biodiversity and water. But it is really very broad across a lot of sectors, which is a good thing. So we need capital into those, and which we will discuss more, I guess, is there are some companies obviously on the stock exchange, more are listing, but a lot of these technologies and new solutions you find outside the stock exchange. And we need more capital flowing into those solutions to scale that quickly.
I just thought I wanted to add that what we're seeing now, we're not just talking about green. We also could see a development within these markets. For example, in the we're talking about blue bonds, we're talking about maybe circular bonds in the future. I think what is important here that we have a clear definition of what we are allowed to call circular. So we have some clear measures. So you could actually see that the companies who are granted this kind of debt financing or investments, that we could actually follow the development, because many of the companies will not be green from the start. They need to develop into the green space. So I think also these kind of financing that could help the companies to change are as important as necessarily to find the green solutions today. So I think it's important then that we find some sets and science-based measures that we could actually follow, so we could see that the companies are moving in the right direction. So in that kind of sense, we're trying to avoid greenwashing.
What are the trends, companies and emerging technologies to look out for going forward to fast green progress and investment opportunities?
On a high note, I think that a lot of the larger investors around, at least in Northern Europe, they've been focusing for years around renewable energy, heavy financing projects, sustainable infrastructure, and so forth. That takes up a lot of capital, and what I think we will, but on the other hand, gives in many cases a direct effect on the green impacts. But what I think we will see to a large extent over the coming years is the enabling technologies around these things. So to a large extent, to say tech for different components, being it in mobility, or being it high-tech agri world. Not as much as what we've seen over the past years in direct renewable energy projects, but rather, you know, Tech 4 as a second derivatives into generating green impacts.
We in Aker BioMarine, we've been in the ESG space for 10 years now, and it's been quite a development, I must say. And if you just kind of follow the journey of our company, it started with, in the beginning, you know, the ESG focus or the green focus were coming from the NGOs, you know, the environmental groups out there that put pressure on companies to do the right thing. So it's kind of, it was driven by fear. And then I think also when Aker BioMarine was established back then, you know, starting as a fishing company, fishing krill in Antarctica and then making products out of that, it started, we have to be good at this because people will look after us, make sure that we do the right thing. So it's kind of was driven out of fear. And I think it was for that, like that for many years from many businesses, that we tried to do the right thing from a green perspective because of the fear from the environmental NGOs and what type of pressure they can put on the businesses. And then I think maybe, I mean, and just this come up from my own experience in this company, I think then something changed maybe 5 years ago, something like that, where employees were starting to be the kind of power of change. We saw that the people we were hiring, the people, especially the younger generation coming in, then they demanded that their company that they were working for were actually having a good purpose, you know, we're solving the challenges of society, was contributing in a positive way, and that you actually had to do this good thing to be able to attract the best people. And I think that kind of took it away from kind of like a fear-driven thing to something that you want to do to be successful. And then I would say, I mean, we just listed our company this summer on the stock exchange. And now I would say the kind of the last wave is the investors. You know, the investors are coming in now extremely focused, you know, on the green opportunity, if you like. But I think there's a kind of a danger in that development too. And it's a little bit the experience that I see, it's kind of very binary. You know, if you look at the Oslo Stock Exchange as an example, I mean, those cases or companies that are really kind of booming, you know, in terms of valuations, are those that are typically startups that are, let's say, 100% new technologies, kind of clean tech things coming in, while probably the biggest change we need is this transition of all businesses, you know, and I don't think the investors value that the same way. How an established business are taking the steps every year, you know, to, let's say, over the next 5 years, gonna take the CO2 emissions down 50%. That kind of effort is not valued similar as someone that is trying to create something new, which is kind of zero. And I think that's
can I challenge that a bit, because we see, for example, on ESG funds that tilt towards the best companies on ESG across sectors. I mean, there's a wave towards companies good on ESG, but which is a different type, something different than a green company. So, but I would see it a bit otherwise, and that's because we have so much more ESG information now, and this is really part of doing a good fundamental analysis when doing investing in a company, and there has been a big push towards those companies that perform better on ESG within different sectors.
But I think it might be driven by the first discussion that we had, that these metrics are a little bit complicated. You know, it's much easier to invest in a wind project, you know, because it's kind of, everybody knows it's the kind of new green energy, rather than this company, this industry is doing better, you know, than the other company from an ESG, because it's much harder to kind of measure and follow. So it might also be driven by that. But I mean, I'm not kind of speaking out or, let's say, data out there, just talking out of my own experience of meeting investors, talking to investors, and what type of questions they have and how they're focused.
May I come in? I think, I mean, this leads to an important point, right? I mean, so if you do a little thought experiment, two sorts of contributions are important. One is, of course, something entirely new. As you said, it could be a new set of technology, path breaking, etc. And the other is dragging the whole economy slowly kicking and screaming towards a new economy, right? So because we're not going to entirely replace all of the old economy overnight with the new economy. And the problem is we don't have the luxury of time, right? So we need to do both. We need to be creating those new path-breaking technologies at the same time as dragging everybody kicking and screaming. And one good instance of this difficult question of evaluation is, so in ESG terms, since you were talking about it, what do you think is a more substantial contribution? Is it that if I go and invest in a company that is clearly in the top 95th percentile of ESG already, right, that everybody knows, or I take a company that's in the bottom 25th percentile, I invest in it, people scream and say, hey, what are you doing? Why are you investing in these guys? I spent 5 years away from the public limelight, work with the management, and then lo and behold, there they are in the top quartile, right? So where have you actually conceptually made a bigger impact? And I think that's an important point we cannot ignore. And I think that is kind of what you were referring to, right? That it's so easy to have something that's sexy and new and interesting and clean and uncontroversial, and the valuations go out the roof. But a lot of the hard work also needs to be done in these shades of gray, difficult situations where there's a if, but question to be answered. And without that second part of it, we are not going to be successful.
But just a comment on that is that I think that there's a distinguishing here on the stock exchange versus outside of a stock exchange. If you're a tiny investor on the stock exchange in a big company, and big investors are tiny investors in big companies. So, the leverage here, obviously we all believe in active ownership, but still on the stock exchange, you can invest here or there, and the capital is just floating around and mixing hands, basically. Or you can also help companies with real deal solutions that we need to scale, that the big companies will, deploy. So I find that the focus is often on the companies on the stock exchanges, but we also need to put focus on the companies outside that need to scale. And when it comes to because investing in a brown company on the stock exchange, if you own 0.005% and you aim for active ownership initiatives, can be discussed. But yes, we agree that the big focus that investors are having on the companies and transition, it makes sense. So we need
Could I just add something as well? Because when we talk about that, some of the complaints about the EU taxonomy is either green or brown. So we need the shades in between, and that is exactly because you are, as a company, you might move between the different shades as well. So I totally agree with you, Sony, that we have a lot of companies that need to move between, maybe brown today will move into more the greener space, and how do you actually support and measure them? And I think that is very important, that we have some clear measures to actually follow up on these companies.
One thing that has been mentioned, since we're now seeing, browner companies splitting out own companies, so, will oil companies in transition, will they be credited for their big, if they have a big renewable, building up a big renewable department, or do they need to split out that company because that's the way to get the valuation that it deserves? So my point is really
you have a very good case now. In our companies, right?
Yes, you do.
Where actually those initiatives that was, let's say that transition that was going on in the oil and gas companies were not valued as long as it was part of the oil and gas company. The moment they spun it out as a separate company, the value was realized. That's like a paradox, right? Because that doesn't foster that the change from within, right?
I think that is something to do as well. If you look at the total, how much has actually the oil and gas companies invested within the green space?
Yeah.
And today that is less than 1% if you look at the total. So less than 1% of your income comes from the green space. That is not enough to convince the investors that you're really going for it. I think they have to do more to actually convince that they are really going into that, leaving the brown stuff behind and actually going full-time into the green space.
I would just also like to add into the discussion here, because I mean, when I started working in international shipping back in 2006, I was an environmentalist going into a dirty shipping industry, which really didn't resonate like from the outside. At that time, most of the commercial guys, which were most guys also back then, most of the commercial guys and the real kind of hardcore shipping people, they had still the mindset that, well, yeah, super nice that you're talking about this green stuff, but you know, some of us actually have to do business. And now this month we will see one of the kind of a several decade long shipping company by one of the guys who would be in that sphere maybe before going now investing really the main focus moving forward into green solutions with TECO 2030 moving in and going for marine fuel cells. So I mean, this has, I think, and especially in the past 5 years, it's been a huge transition coming from the big players and more of the players who were usually some years back into a more kind of mainstream business as usual approach. And now I don't think they go into it because of the ideological reasons, but I of course that might weigh in as well. But I think it's also especially because they see that now there is a huge shift and the winning teams will be the ones now doing the transition and placing their bets on green solutions moving forward.
I absolutely agree with you, because I think initially, I look at the humanity state is that when we act, when there's a fear, when there's urgent danger. But the problem is, when we see the statistics are piling up. You know, we see the water level rising up, we see this homes are being destroyed. But at the end of the day, when it's so much data, it becomes statistics, and we become too insensitive with those statistics. I do believe that when we actually show the results of our portfolio performances, I think great example is Ørsted. It's a Danish, used to be a Dong energy company based in Denmark. They used to be one of the dirtiest oil companies, but you know what? They tear up their business plan. Now they're doing one of the largest wind farms and solar farms, a solar energy company. They're extremely successful, and look at the stock market performance does speak the volume. They're massively outperforming BP, Chevron, and all the other oil companies, oil and gas companies. So I do think that if we show the investors that we are actually making results from those green energy companies who have a strong purpose, who actually walk the talk. BP, for example, they committed 5 billion out of their 15 billion capex. So if they actually show the commitment and show the result, I think more people will commit. Otherwise, it becomes another buzzword and another statistics that we become too insensitive about it.
I wanted to add to this conversation as well that I think when the oil and gas companies are putting forward the plans to become more green, I think these plans are often so long term that it's difficult actually, as I said here, that it's difficult to follow if they're actually doing the right thing they're saying. So if the goal is in 2030 or 2050, you know, to become net zero, how could you actually, as an investor, go into this company tomorrow or you know, what will happen in 1 year's time, 2 years' time? You need to have short-term plans as well, short-term, medium and long-term plans. Otherwise, we can't really trust what you're saying that, okay, you're going to get net zero in 2050, but we want to see something tomorrow. Otherwise, we don't believe you. So I think that would help as well to convince the investors.
I think for me, it's an incredible sense of urgency. If you look globally and representing the government, it's for sure our most urgent and long-term challenge would be the climate change. And then it often turns into a lot of discussions about one side, the technology and the progress that we are making, and the other side is of course is this economically viable and what would be the return of investments. I think at the end this is about developing meaningful solution, improving people's life. And I think it's important to bring that into the discussion in order to how we prioritize. So what to do first, second, and so on. And I have to say it's in terms of the climate change, if you look at the extreme weather, the fires in California at the moment, the water sources that drying out, it's how we bring that kind of problems to people and challenge them to find solutions. And I think that's where the investment community needs to work closely with both the scale-ups that I'm often work closely with, but also the larger communities.
Female investors tend to apply a more value-driven and longer-term approach when it comes to investment than men. What can men learn from women here in the context of green and impact investments?
So, these questions are always very tricky to answer without going into gender stereotyping.
Exactly.
So let me try and answer a related question, which is what can a focus on impact and longer term perspective do in terms of investment? And I think there's an enormous amount of financial value to be had. So even if one focused narrowly on just risk and return, right? I mean, without any of the added softer additional KPIs, there is a lot of improvement within the investment landscape. So number one, by having a longer term perspective, you are more likely to think more clearly about secular trends. And it is exactly secular trends which are now mainstream, right? I mean, sustainability now is understood to be a mainstream secular trend, but that wasn't always the case. And the biggest, similarly with digitization, right? I mean, everybody throws the word left, right, and center, but it is people who spotted those secular trends early on, who were able to contribute and add a lot of value, including a lot of financial value to themselves. And having a longer term perspective, focusing on impact also in terms of what can I do with my particular business idea if I'm an entrepreneur. That is not just about how much money I can make, how quickly I can make it, what margins I can have, but how is this going to fundamentally change the way people live? How is this fundamentally going to change, improve the lives of people? And therein, particularly looking at the situation in developing countries, where there's an enormous amount of unmet demand, very young demographic, and future large catch-up growth potential in terms of them being far from the technological frontier, we know that many of these developing countries will have to have growth models that cannot look like the growth model we have followed, right? I mean, the planet will not allow that. And for those people who are sitting right now thinking about impact over 20 to 30 years, those are the people who will end up being the financial winners of tomorrow. Even if today, somebody who is more sort of traditionally cutthroat, in the financial world comes and says, hey, come on, don't be a softie. No, but look at all this profit you're leaving on the table. I think that in the long term, impact, that longer term perspective, lower risk, higher return are all pointing roughly in the same direction.
I think what we have to do is redefine the word growth, because before it has not included the social and the environmental aspects of it. So when we talk about growth so far, we talked about the financial growth, which is clearly have had some negative impacts on the society. So if we talk about growth in the future, we need to also include the positive and the negative effects of today's consumption, today's investments, because I think, the way we will distribute the money, move the capital, I think that will change when we include the social aspects into the way of defining growth. So that is something we need. When we talk about do female and male investors invest differently, well, I think we don't have enough data really to say so much about it at the moment. Basically, because women doesn't have or haven't historically been in control of the capital. That is mainly the men who's been in charge of that. I think that is about to change. So if you ask me the same question 10 years from now, maybe we can have a good answer. So far, it has at least been indications that women haven't been lagging behind men in many ways. I heard an interesting presentation in the US when I went with the SHE conference there, the SHE Invest group, and they said at the university there that the perception that women and men were looking at risk in a different way. It was far too early to say that women were more risk averse because we're not used to having money. We're not used to thinking about investments. But when we do, will we actually think very differently about it? So I think we need to leave that question and take it back or repeat that question 10 years from now and see, because hopefully more women will go into the financial sector and take part of the investment, because managing capital is such an important tool to have to actually could say something about how we want the future. Because I think, the different companies represent a set of values, and leaving all that, choosing the future or what companies we're going to invest in to men only, I think we're missing an opportunity to influence the future for our families. So I think 10 years from now, I'll answer that question.
It's just to add on to Tina's comments, I think in order to build the green solutions, there will be a lot of heavy lifting. And in order to do that, independently of female or male investors, I believe that we make a bigger impact by working together. So that's my hope for the future.
From my experience as a trader for over 13 years, trading flow is extremely dominated by men. But you know what? The most profitable traders I ever worked with were females. They're sitting quiet, taking huge risk. They're not risk averse, by the way. They have $200, $300 million in their books. And we, those large traders, those male, they have maybe 5, 10 million, and then, they're still being loud. But female traders, they're quiet, they do their job, they take huge risk, and they go home. Not necessarily the loudest one. But the problem is the hiring managers tend to hire the ones they are like. So I think the problem in the industry, in the investment banking or investment industry in general, is that we need to broaden up our own perspective when we actually hire people. Not necessarily the person I like to hire is not necessarily the best person to hire. It's not the most profitable person to hire. So yeah, that's all I can say. I think female, black, yellow, orange, doesn't matter. As long as you hire the good, right person who's got the, share the same vision and vision. And you know what, females have been awesome. I'm fortunate enough to run my business with my wife. And, I talk and do this and that. And, she's sitting quietly doing her own, making actual progress. So I'm extremely proud of her. So, it's, I think we all need to look at not just the gender bias issue, but, just try to be generally more inclusive and look at, different angles.
And Mats, I think that's a point where you guys in Aker Marine has really pushed the framework when we compare to other kind of regular Norwegian companies.
Yeah, I think diversity both when it comes to gender. So we're 50% female, 50% men, and it just happened to be like that. It's not like a goal to be 50-50, it just kind of became like that. But also, I think we have 40 different nationalities. We have people, that have no education. We have people with double PhDs, and we're really getting value of getting all those different perspectives into the discussion and the topics that we're discussing. So I really kind of felt the value of diversification.
How do we lift green initiatives that stems from Norway globally?
I can just throw out a very quick thing, and I think part of the challenge with Norwegians is that we're kind of too humble. You know, we don't think global enough. And I think Heidi with She is a very good example. Now, I was at an event with She here the other day, and they're now going global. But I mean, with those big, hairy goals. I mean, if you go to San Francisco or, you know, all these places where a lot of the kind of new development is coming, they're thinking huge. In Norway, we are thinking too small. I don't know if it's the jantelov or it's the kind of culture or what it is, but kind of we are not daring to think big enough here in Norway. I think that's kind of our main challenge.
I couldn't agree more with Mats. I think with Heidi's going global, and when we started TOOL last year, also it was global from the beginning. But I also think that's a very like non-Norwegian approach, and I do still think that we have this this mindset of not being too different, and I think still the Norwegian society aren't really always appreciating the crazy change makers to the extent that would be healthy to push change in society. But when it comes to Norway's role, I also think that we have quite some amazing capabilities if we dare to also be bolder, because we are a very small and trust-based and open society with small social differences, and we are taking a place now as a green test bed on the city level, because we are so small. We have a very proactive population when it comes to taking on new technologies, new solutions. We trust each other. So I think moving now from being a green test bed for like urban communities, like cities, over to now being a green test bed also for the ocean industries, and I mean, spanning out. I think this is I think, yeah, your previous employee, Mats, Silja Indal, she had an example that I like to use in my work. It's about being this very small change-making moving part in the big machinery. So we are a small country, we are few people, but we could be that small little piece that makes the bigger machineries work and change and accelerate speed. And I think that's a really interesting role for Norway to take moving ahead towards big populations and big power countries.
Obviously, I spent almost my whole career working for Norwegian companies, primarily scale-ups that wanted to obviously be brave and scale hugely globally. And if you ask me, they are extremely talented. I never failed on any technical solution in my whole career doing that, and that's just I mean, it's just a proof that what you get from Norway is high quality. But what I see as a challenge for Norwegian companies being based both in Silicon Valley and currently in London is the capital that they are willing to put in, especially early on. In Norway, unfortunately, the capital goes to other asset classes, and of course, that's a challenge for the scale-ups. It's not a doubt that in early days, both in Silicon Valley and in London, business models are fragile, and you need a lot of funding in order to scale fast. So I guess utilizing the close relationship to global hubs, that would be one of my recommendations for Norway going forward, is that they need to be more present and they need to global hubs, and not only for money, but also for knowledge.
And just a comment from Suzanne here to add that, you know, we're not saving the world by, let's say, only investing in the stock exchange and real estate in Norway. We need the capital to flow. So one thing is infrastructure, but two, these scale up so they can scale fast. We have not a lot of time to reach our Paris targets. So because if you look to Sweden and actually Finland, they have a lot more venture in their asset allocation mix. So, you know, pension funds are very long-term more foundations and pension funds in Norway. Let's hope they can also join in here and invest in scale-ups as well, startups and scale-ups, so that we see they scale fast.
But I think this is also where we really still lack a little bit of maturity, and where I think the various players that are pushing the boundaries in the Norwegian market needs to work even more together, collaboratively, in the years to come.
Yes, and I would also see more challenge on the boards, actually, of the companies. We need boards that are as brave as the founders, and also that have the insight and the knowledge and the stamina to support them. And I compared to other global hubs, there is a lot more that we can do on that part as well.
So Hilda and Mats, I was just thinking that just to move the conversation going forward, what were some of the impressions that you got and some of the comments on what you were discussing on Tuesday?
I think two reflections that I made. One is that there is a quite complex environment in terms of different metrics. How do you define ESG? What is green? You know, how do you get evaluated? So I think kind of that's kind of one takeaway. And the other one is that there's a situation here where things are moving very, very fast. You know, so it's developing very fast, and it's kind of not easy to kind of follow and track. I mean, you thought last year you would come on top of things, and then 1 year later everything has changed. So it's going to be quite demanding for companies and for management to keep track and stay on this topic. Yeah. We just have to take the challenge serious and kind of think that this is not anymore like a corporate responsibility function on the side. It's in the core of the business, and if it's not core of the business, you're not going to have a business in the future. So I think it starts with the management to realize that that is what it is, and that's how we have to approach it. And I think once you kind of realize that, and it becomes kind of an important part of the agenda, then I think the ball can start rolling quite fast.
Because you talked about it with regards to the investors earlier, their focus. So what are your thoughts around how to get them on board with regard to being attractive from an investor point of view?
Yeah, I think actually the investors are starting to come on board. A lot of the funds out there, they have kind of mandates where they should have this much of their money invested into ESG companies. And I think honestly that there's not that many high quality ESG companies to invest in. So because of that, those that actually have high quality kind of ESG kind of strategies and doing kind of big changes, they few of them, and because of that they're in lot in demand and value increases much faster. So I think the investors are already there. I think it's going to be hard and also difficult for the investors to kind of figure out how do they rate what is good and what is not good. So today they kind of go with the easy solutions, which is kind of an investment in clean technology, carbon capture. I mean, these kind of very clear, you know, ESG companies. But I believe a lot in the transition that needs to happen with the kind of industry that exists. And I think that's much harder for the investors to kind of get the grip. Is this a good ESG company or is it not?
Absolutely. And I think it's, for me, some of the takeaways was the short term, what's happening now in the short term versus the more long term. And I think investors especially will be key to the transition, because being supportive of the scale-ups, especially from my side, you need a lot of energy, but also, of course, the capital to support the transition. And I think there is a lot more to be done actually by combining the new and transformative technologies that we have, and that we see now more the industrial parts, especially in Norway. We see industrial companies now starting to apply in a much more strategic and tactic way the power of data. And I believe that that's also the companies that the investors will seek to support in the future. So I think for the larger companies, it's all about how do you utilize what we have on the more innovative space. So the smaller, the scale-ups, the ones that have done a lot of innovation currently, they are now at a point in the technology shift that we start to see it works more on a scale as well. So I think that looks very promising. I had a meeting actually with a large US fund today, and he said the Nordic companies, they are really attractive because they have invested a lot of effort into finding real solutions to the problems. So that's one thing. And the other thing is also that they are straightforward. They are actually have quite a high ethical also standards, and I think that goes with the ESG, of course, but also in general to take on such a large challenge that's going to not go away in a few years, but it's you need to stay in it for the long run to really solve the problem. And so I'm very optimistic on behalf of Norway, of course, but I do think it's definitely a global challenge. So we need to also to collaborate on a global scale, and that's part of our work, is actually bring a larger ecosystem, and I think that's increasingly important going forward.
What do you see as the investment opportunities going forward with regards to the green space?
For me, we actually support a lot of the technology companies. So that would be within artificial intelligence, it will be within industrial IoT. So more the technology needed to drive the transition. And of course for Norway, clean energy would be a strong area. And also on the offshore wind, we have a lot of to offer when it comes to ocean technology, of course, and companies like Aker Biomarine and the other larger ones as well. I mean, for Norway, it's important that we keep the strongholds that we have had for a long time, and then combine that with the digital talents that we also have in Norway.
All the big consultancy companies have provided report after report that actually having a certain percent female participants in the different leadership levels is more profitable for the companies. They have higher returns. But I'm just wondering, that's the economic aspect of it, but how do that also combine to the green shift? There's there's diversity and inclusion shift, but there's also a green shift happening. What are your thoughts on?
No, I think there, and maybe that's where the female have an edge, because also I think there, and again, I haven't analyzed kind of the reasons for it, but I mean, there's a much more passion and drive for changing society, at least how I see it, from female than men. And, if you look at most kind of ESG positions or sustainability directors out there, they are females. And okay, some years ago, it was a side part of the organization. Now it's going to be core. So I think from that green shift point of view, I think that that position that females have with kind of caring about the environment and having that bigger perspective, the bigger picture of it, I think that might actually help to trigger to get more females in leadership position, and also on the investment side, because they also probably more believe in the importance of ESG and make their investments in that segment. And because of that, they will be, have better profit than those that do not.
Thank you. What are your key thoughts on that, Ina?
I actually agree a lot with Mats on that point, and I think also it's about gaining the experience. So with the green shift and the digital transformation, all the big things that's ahead of us now, there is a lot of choices to be made. So we need, really what we need is good decision makers that's able to see, you know, what could be in a practical way approach problems and find good solutions, but also in the long term make sure that we take the holistic and actually navigate with all the different stakeholders. So there, of course, it would always be compromises, but it's the decisions that we need to make. And I think actually more female executives, if they get into the position, get experience from taking those decisions, I think they will excel really fast. So it's just to how could we position the female leaders to really excel on the levels that they can impact. Because at the end, it's all about where would you actually do the most impact. And I believe sometimes that's actually be in a position to actually make the decision. Even though the green shift has been there for a while, and especially from the government side, we obviously been trying to encourage and to persuade people to actually take this into the actions. And we've done that for several years, but it's first now that we feel there is a really a push behind it, and the urgency is just compared to just a few years back, it's an incredible urgency. And I mean, for the female leaders of today and tomorrow, it's like a new playing field opening up. And I think that's it's one thing is that we all need to come together, female and male leaders, to fix the problem, really. But it's I feel for female leaders that wanted to take on a huge opportunity, it's never been a better time to do that. And so that is basically an amazing opportunity. So I would just encourage as many as possible to really look into it from different perspectives. It could be as investors, but it could also be as the one providing the solutions. So we also need more female tech talent. So I would wish to see a lot more of them.
I totally agree with you that, and I think there is now with this new playing field, everybody has the same starting point, because there's no competence, you know, or no kind of you know, generations of companies built by men. I mean, now everybody is equal when it comes to having the knowledge and experience with this green change that's coming. So I think now everybody actually has the same chances to do something about it.